This chart compares Aave's annual real revenue against its market cap. We are looking at over $100 million in actual yearly cash flow, backing an asset currently priced at just $1.2 billion. In the crypto sector, seeing an entity generate 9 figures of real revenue while trading at a fraction of standard industry multiples is extremely rare. That specific ratio forces a difficult decision. You are either looking at the single best value investment on the market or a massive trap. Aave currently operates across 21 different blockchains as the dominant lending protocol in the entire crypto space. To figure out what this protocol is actually worth, we have to ignore the usual market noise and break down exactly how it captures and holds capital. The mechanics start with a simple input. Users deposit their cryptocurrency assets directly into the system to earn a steady yield. This flowchart illustrates exactly what happens next. Those deposits pool into a central smart contract, completely bypassing a traditional bank entity, allowing users to instantly take out collateralized loans without ever selling their original holdings. You eliminate the friction and the credit checks of legacy finance, but in exchange, you must place absolute trust in those on-chain smart contracts. That technical architecture recently evolved with the launch of Aave V4 in 2026. V4 introduces a highly modular structure specifically designed to onboard heavy institutional capital and integrate real-world asset markets directly into the protocol. Replacing physical banking infrastructure with modular on-chain code creates massive profit margins. However, it completely shifts the burden of risk onto the integrity of the code itself. This checklist tracks the protocol's tokenomic health. Total supply is hard-capped at just 16 million tokens. Over 96, because almost the entire supply is out there, the risk of inflation functionally drops to zero. Then you factor in the protocol's cash flow. Since a massive governance change in April 2026, 100% of protocol revenue now routes directly into a $50 million annual buyback program. Taking those protocol earnings and constantly buying tokens off the open market creates a relentless built-in demand floor. But this incredible deflationary setup is currently fighting an uphill psychological battle against recent security failures. The token's mechanical structure is ruthlessly optimized to capture value. If market sentiment eventually turns positive, that low supply and high buy pressure creates a highly volatile upside. This line chart maps out the brutal reality of the current price action. The token sits around $78, a steep 88% decline from its $670 peak in May 2021. That deeply discounted sentiment stems directly from a major bridge exploit that hit the protocol in April 2026. That massive breach caused immense damage, leaving Aave saddled with up to $280 million in bad debt. The secondary market reacted immediately. Total value locked plummeted by 52% compared to its late 2025 peaks. Looking closely at the current technicals, the most crucial forward-looking metric is this thick horizontal resistance line squarely at the $100 level. For a cautious trader, the required input right now is simply waiting for a confirmed, sustained break above that exact line. Crossing and holding that threshold signals to the broader market that a legitimate momentum reversal has finally begun. Waiting for that $100 confirmation guarantees you will miss buying the absolute bottom, but it provides drastically safer entry timing. The current price vividly reflects the lingering trauma of that exploit. Technical confirmation is a mandatory requirement before blindly trusting the bullish fundamental data. So we are looking at a clear divide. Aave generates more profit than almost anything else in DeFi, but it still carries the heavy scars of a 52% drop in total value locked. To evaluate if this asset belongs in your portfolio, you have to explicitly define your timeline and risk tolerance. This decision tree maps out the options. If you are a value or patient investor, your strategy relies purely on long-term cash flow metrics. For patient buyers, the setup is highly interesting. You are securing a deeply undervalued, highly profitable asset at a massive discount. However, if you are a short-term trader prioritizing momentum over fundamentals, your outcome is different. You wait for the $100 break. Buying in without that confirmation unnecessarily exposes your capital to continued downward pressure. Ultimately, Aave is a long-term cash flow juggernaut currently masquerading on the charts as a high-risk, short-term gamble. If you decide the setup matches your strategy, the primary centralized venues for acquiring the token are Coinbase or Binance, while Uniswap is the go-to alternative on the decentralized side. Let me know in the comments if you are feeling bullish or bearish on Aave's recovery. And if this breakdown helped you think through the data, like the video and subscribe for weekly deep dives. Remember, no matter how strong the cash flow or how weak the chart looks, independent research remains your only real defense in crypto. This is not financial advice.